Good afternoon, everyone, and welcome to this live video interview with Zinzino. My name is Niklas Elmhammer from Carlsquare Equity Research. And we are very pleased to be joined today by the CEO of Zinzino, Dag Bergheim Pettersen. And please remember that the chat is open, so please submit any questions that you have. So, good afternoon, Dag. Great to have you here with us.
Thank you for having me.
Zinzino released its Q1 report today. Could I please ask to start by you going through the highlights of the report?
Well, the highlights, I think, is for number one, it's the growth that we had with this quarter. 59% is quite a bit if you compare that to last year, and I think the profits are about what we expected and what we have promised the market. So in general, we are pleased with that. That is the simple stick to that report.
Yeah, and congratulations on the strong growth. What is the explanation for the growth acceleration in the recent quarters? Have there been any recent enhancements to pricing or revenue model that could help explain that?
I think there's not one single explanation to explain it. So parts of it's I would say a long-term work. We have acquired 3, 4, 5 different businesses the last 3-4 years. So that have been an accelerator somehow, that we have had growth, underlying growth, organic growth, so to speak. Last year, we bought a company called Xelis in France, for instance. So for a year, we have had pretty good growth in France. That has been good. We have had a lot of different initiatives when it comes to the marketing and the way that we have, I would say, done our promotions. So the bundle of things and the way that we have established ourselves in different markets. And then, of course, the last quarter, we also acquired through Chapter 11, Zurvita, an American company that added some growth. But I would say the underlying things is that we've done a lot of good things over many years, and then that pays off a little bit for the last, I would say, 6 to 9 months on the growth side.
But the revenue model is basically the same, is that right?
The revenue model is basically the same. We have lots of customers in different markets, and we have established ourselves in lots of markets. I would say some of them are doing amazingly good, but it takes time to build a market, and some of them have been established maybe 3 to 4 to 5 years ago, and now we see some return on that investment. So there is no change in that perspective, but the way that we have promoted, the way that we have continued, and of course we are also in a space where I think we have an edge. One of the things that we are offering is a test-based nutrition. And I've said this before, we started that kind of trend 13, 14 years ago. We bought a company that was a science-based company from Norway, and then we offered a product in combination with that. And we can see now that people are more aware of their own health than ever maybe before. And I think the pandemic caused some attention to that. So the wellness space and personalized nutrition and test-based nutrition, which we offer, is a trend base. So that is also part of the explanation that we are on the front foot when it comes to offering these things to people. And I think that the awareness in tons of different markets are there because of you see a lot of different things, increase of different things, like for instance People are gaining weight, as you know. People want to take care of themselves. You can see that the world are in a huge change. Through COVID, you learned a lot about what kind of vitamins and minerals you needed, maybe the lack of D vitamin. All of these things that we have an offer for the population and for the consumers.
Okay, I got it. So favorable trends in the macro environment.
Well, that one part, it's the promotion, it's the product, it's the edge that we offer, everything that we've done the last decade, plus the trend, just to be accurate on that.
Yeah, thank you. And regarding your revenue model, you have this subscription-based revenue. I guess many of our viewers are curious to learn about recurring revenue. So how much is that growing, your subscription business?
Yeah, well, our subscription business is constantly growing. We are measuring this in many different ways. So we have a large database of customers now, over 500,000, I would say, who is buying frequently. We have 80% of the revenue comes, I would say, more directly from consumers who are not necessarily on a subscription, but they are buying products pretty frequently, every third, every fourth month. It's a little bit depending on in which markets they have the subscription. We have, of course, all the data on that. And in some markets, unfortunately, you cannot have a subscription model the way that we think of that in Scandinavia. But what we want to do is to become the Netflix of test-based nutrition. So what we want all of our customers to have some benefits being on the subscription, and we offer that. So when we are calculating the revenue for the next upcoming month, we have pretty exact numbers of what kind of revenue we will have on the customer base that we have. And that matters when it comes to the way that we are purchasing products, manufacturing products, put stock in our warehouse. So it makes our life extremely easy, because that's also part of the question here. Can you calculate what kind of revenue you will have in May, in June, July, and August? And are those customers staying? Are they happy? Are they unhappy? Are they churning? Are they referring us to others? And all of these things I can answer pretty good on and say, yes, we have a fan base of customers who are constantly buying products.
Okay, that's very helpful. And looking at your geographical markets, in absolute terms, North America and Central Europe has grown by the largest amount here. Could you comment on the dynamics in these so-called core markets?
Well, I would say that the Central European market has been just fantastic for many years now. And I think that one of the things that we are offering, I mentioned this before, so I'm going to hold up. If you can see this is our balance test. So you can measure 11 fatty acids. And we have offered that for now 13, 14 years. We still have not taken an analyzer, a test on the German population, less than a percentage. So the dynamics you're talking about are, of course, we are growing fast, we're doing good. In nominal numbers, we're super happy. But it's also just a start for us. I mean, we can grow with the same pace in Germany and in the region around Germany for probably a decade without any problems if we're just doing our job. So that is pretty crazy if you think about that trend-wise. In US, the US population do have a higher need for food supplement and tests. So we can see that in the results that they are probably, when they are taking the test, I would say I would say that they are failing the test in a much higher grade than Europe in general. So US needs some solutions that we can offer. The dynamics you're talking about, of course, US has been growing. It's the second largest market after Germany. US have a huge potential, both in the population, the way that they need our supplements and the test-based nutrition. So, I mean, I believe that US and Germany will be competing on being number one by the end of this year, but it's going to be a tight race. Still, Europe are our home base, I would say, so it's still number one. But happy to see the development in US, and one of the reasons why we acquired Zurvita and added that to Zinzino was to have more distribution power in US, because we know that that market needs, on our side, more attention, I would say, because it has even a larger potential than Germany with the population and the need for food supplements.
Okay, thank you. And we have a question from our audience regarding Zurvita, as you mentioned. How is the integration going, and was Zurvita profitable in Q1?
Well, it's a little bit early to say about the profits. I just I'm coming out of the Chapter 11. We've never done this before, so we've learned a lot of new things. It was a challenge, but we came through it, I would say, landed on our feet pretty good. Zurvita is a good addition at Zinzino. Distribution power, they have some strong products, they have a lot of fan bases on their products, and they have now been, I would say, fully integrated into Zinzino. We are doing some small adjustments and closing some of the things from Chapter 11 the next months. So it's a little bit too early to say if it's profit for Q1. But the good thing, though, is that we have been able to acquire that company and also a smaller company in between this meeting and since Chapter 11, and we are profitable. So we are able, when we have found a model of acquiring companies or assets in a way that is beneficial for us, for their customers, and for their partners. So of course, that is a big part of I would say, our success the last decade. If you look at Asia or you look at Europe, we have done a lot of assets deals, to put it like that, which we have announced.
Okay, and regarding the US, a current topic for many companies is trade wars and tariffs. So how do you see the impact on your US operations?
Well, I think every company needs to have a buffer. They need to be okay with changes. And in our case, it's just living through these changes and try to maneuver and steer the ship as good as you can. And then I think that the tariffs, everything will be negotiated. I think that US is gonna try to find a model that works for them and the rest of the world. And I think you've seen some of those changes already. And the main product that our company that we bought in US, they are manufacturing that in US. So that doesn't affect us that much. But of course, if the tariffs goes too high, we need to adjust our prices and be just ready to put that further on to, unfortunately, to our customers. Plus, we need to be adjustable on our cost side and be smart in how we are maneuvering in a tariff landscape. I think my point is that we have been dealing with this in tons of other markets the last decades. So this is not a new thing. In Turkey, in India, in China, in Malaysia, in many other countries, even Norway, we need to be able to switch around and change and be adaptable to a situation. So the ability to be flexible and change has to be good in our company. And then the tariffs could be like the tariffs will be.
Okay, thank you. And we have another question from the audience. I guess we touched upon that. What percentage comes from subscriptions, and how is the growth compared to last year?
I think if well, I covered that, but it's a little bit different from market to market. But you can say that 65% of the revenue comes from subscriptions from customers, but you can say 80% come from frequently bought products. So we do not differentiate too much on that. But we have a large chunk, like 75 to 80% of the revenue we know already what's going to be in May, based on the model that we have. And that gives us a lot of flexibility and easier to forecast production needs and all those kind of things. So we're happy with those numbers.
Okay,
if there's an increase from last year, yes, it is.
That's clear. And in terms of profitability, we saw a stronger profit growth this quarter. So, and what level of growth initiatives should we expect going forward? I mean, your investments in recent years have obviously paid off in terms of growth.
We have a long-term strategic plan. We want to grow, and we are growing faster than what we have promised the market. So we are just keeping the gas pedal on speed and trying to take all the good initiatives without being too neither bold or crazy bold, nor too afraid. So what we're trying to balance the initiatives in a good way. We just launched a new platform e-commerce model for China, extremely important for us. We think that China is going to be a profitable and good market for us. We've been testing the last 3-4 years. We are now establishing ourselves in the Philippines. We have a lot of initiatives in Latin America, both in Chile and Peru and Brazil. We see a large growth in the market of Taiwan, and we just opened New Zealand. So of course, Japan and South Korea are markets that we are looking at. And then we know for sure it's going to take time to grow this market. So, but we have patience among the shareholders and among the management and the owners and the board. So we are looking long term on all of our investments, not like quarter for quarter. Of course, it's important, but the importance would be to keep this on a long-term strategic basis.
Okay, great. And there's a question from the audience regarding the gross profit margin, which was lower in the first quarter. You mentioned remuneration costs and bonuses related to the high growth. So what is sort of the underlying development for the margin, and should we expect lower margins if you keep growing this fast?
I think one of the reasons why we set the bar at the level that we did when we were talking to the market, that we will have a certain percentage, 10% of the EBITDA, is just to show the market that we will continue to invest in new markets, but also new technology and new products, and maybe also the acquisition. Of course, some of the acquisitions costs money, so you need to that's an investment, which is paying off now in growth. But of course, it costs some money. But I think we are okay with the level of profits that we have. We could probably have changed that model and have a lower pace of growth, and that would have been easier for us then to earn more money, focusing more on the costs. But we think that we have a possibility now, and that is to continue the growth, and then our margins will be following by the scale. And we've been proving this for many years now, and I think that's going to be the truth. If you have the same conversation 3 years from now, I'm pretty sure that we are still in a growth space as a company.
Thank you. And last week you announced China as a new market where you plan to expand with a cross-border social e-commerce model. Could you elaborate a little bit on your approach to the Chinese market?
Well, the Chinese market is pretty regulated. It's a very technology-based market. It's an interesting market. It's soon maybe the largest economical country on the planet. So there is a race, so to say, and I think the awareness of health and is pretty high on the Chinese market. So in China, you can probably find three different models. This is a model that is very been proven to be really functional. So it's very integrated with their WeChat program, which is a hybrid between YouTube, WhatsApp, and payments and everything. So everything is connected in that. And it's a proven model, and we've been working on this for a couple of years now. So we're super excited and happy. If it's going to be turning out to be exceptional over the next quarters, then that would be a pleasant surprise. But we have patience to make sure that we are having China as one of the blooming market for the next, I would say, 5 years. So let's see. It's going to be a lot of adjustments before we are perfect in the Chinese market. But we know a lot from being in Asia now 5-6 years in a row. So we have a lot of experience in what's working and not working. So we are still in a learning mode, but I think we will get it. And we see the traction in Taiwan has been exceptional the last year. So that has been really fun and excitement, and give us a lot of confidence that we will be doing good in China over the next years.
Yes, and regarding the Asia Pacific region, I mean, your growth has picked up significantly in recent quarters. So what is behind this development? What kind of products are driving sales here?
It's the same products that we have everywhere in the world. It's the balance test and the balance oil. That's the number one thing for us. We see India has been growing pretty fast. Taiwan has been growing. Malaysia has been growing. But it's coming from constant work over many years. So there's nothing really exceptional other than we are having some traction now finally. Like we spent a lot of years in many markets, and US it took us maybe 8 years to really have traction in US. So that is what's behind it, I would say. Good distributors, good I would say corporate management in Asia is doing good, and a good offering, good products.
Okay, and another question from the audience. Will you launch a new test in 2025?
Yep. So that's happening. That's one of the big targets. We've been working so many years for this. So the team with the doctors and the scientists, they're working crazy hard on this. So I just came from a meeting a couple of hours ago where we were discussing this. So it's a lot of excitement. Later this year, I guess in Q4, it will be revealed and launched. So that's going to be fun. That's going to be fantastic, not only for Zinzino, but maybe also for the people who is taking the test.
Okay, thank you, Dag, for bearing with us and taking all the questions. It's been very helpful and enlightening. Do you have any closing remarks?
Nothing else than thank you for watching, thank you for listening, and thank you for all the support that everyone that I know is watching us for Zinzino. I can feel that giving us tailwind, so that's nice. Thank you for having me.
Okay, thanks again, and thanks everyone for watching, and hope to see you soon again.